Hi traders, welcome to another episode on the trades you missed last week. So on this episode, for our first trade, which was on Monday 11th of August 2025, we had a bearish trade in the morning. So this is where we found our fair value gap right here. So let's put this one aside. So this is our fair value gap here. This whole candle, you can see the space here. So this is where we would use for our point of interest. So we expect that price taps into this first fair value gap here, as it already has done here. So the next one is a newly formed fair value gap and a break of market structure to be cited. Now we have a tap into this fair value gap, and we also have our break of market structure right here. You have a break of the structure. As you can see, there was a close below this previous low right here. And the next thing we look for is a fair value gap right after that fair value gap and break of market structure. Now we can see this fair value gap here. We can use this as our entry right here. So we use this as our entry. As price taps into this fair value gap, we'll enter for our short position right here, like so. So we have a short position here using this previous high here as our stop loss, this one right at this fair value gap as our entry, and any previous low for our take profit. You can see we can use this previous low here. This is giving us a risk to reward of 2.74, as you can see right here. And you can see how market also went down below this previous low here, giving us a risk to reward of 4.81. Now the next trade is our trade number 2, and our trade number 2 is a bearish trade also. And our trade number 2 was a bearish trade also. So you can see from this supply area here, you can see our fair value gap. Now price reacted from this fair value gap here. Now price reacted from this fair value gap here, giving us a bearish break of market structure at this spot here. Now you can see that after price reacted from this spot here, it created for us a break of market structure and a fair value gap here. This fair value gap would be our entry area. So this is how we would enter for our short position for our trade number 2. We'll put our stop loss right above this high that created for us that newly formed fair value gap. And the next is our TP. Our TP will be right below that low prior to the trade, so giving us a 2.72 risk to reward ratio. And you can see how the price rallied down. You can see how the price rallied down to take profit at this spot, giving us a risk to reward of 4.4 ratio. The next trade is our trade number 3, and it's right here. This trade is our first bullish trade for this episode here. We have a tap into this fair value gap here. The next thing is a break of market structure at this spot. Now we have a break of market structure here and a fair value gap right here. So this would be used for our entry. So let's use this. You can start from this order block here and use this low as a stop loss. Now we'll put our long position just like so at this order block here. Our entry will be at that fair value gap that was newly formed. and our stop loss would be at that previous low as stated earlier. So this would give us a risk to reward of 3 ratio, 3 points. Let's see it again using this previous high right here. Using this previous high will give us a risk to reward of 3.05 ratio. Now the next trade is also a bullish trade, and this is going to be our trade number. Okay, this next trade happens to be a bearish trade, which is our trade number 4. Now this trade number 4 goes like this. Because we have a fair value gap at this spot right here, you can see how price tapped once into it but did not give us a break of market structure, neither did it give us a valid fair value gap right here. Now as price taps into this valid fair value gap, now we can see a break of market structure at this very spot here. This is a break of the market structure, giving us a bearish trade and a bearish fair value gap at this spot. So we would anticipate that price will come back to this newly formed fair value gap here to give us a bearish trade. Now we can use this order block here to give us a higher risk to reward ratio. Now using our short position as this order block right here, you can see that our trade goes all the way to give us a 2.87 risk to reward ratio. That is using this previous low right here. As you can see, before this fair value gap at this spot, we would have taken our profit. Now moving forward on our trade number 5, you can see how this fair value gap is being tapped into by the price multiple times. So what we need to anticipate is a break of market structure and a fair value gap. Now we have those two in order. We have it like this: a break of market structure here, and we have a fair value gap right at this spot. And this fair value gap is so big that what we might need to do is to define it more efficiently and use this order block right here for our entry. Now this is how our long position would be. As price taps into this fair value gap, piercing through to tap into our order block right here, this would give us a much higher risk to reward ratio. Now this right here would be our stop loss, and our entry right at that order block. Then our take profit can be at this high. This would have given us a much smaller risk reward ratio of 2 point something, or you can also take it to this previous high right here, right before hitting any fair value gap. So this would have been our take profit, and this our take profit is giving us a 4.14 risk to reward ratio right here. And this was our trade number 5 right around the corner. So we have a bearish trade for trade number 4 and a bullish trade for trade number 5. The next on our list is our trade number 6, and this happened to be on Thursday, also a morning trade. So now this is a fair value gap right here. You can see this fair value gap. You can see it here. Price taps into this fair value gap to fill it up and goes all the way up to break a previous high. You can see these highs have been broken. Now what we look for is a fair value gap, as your price structure has been broken. Now this is our fair value gap here. This is our fair value gap here, and our long position would be at the start of that fair value gap, or our order block right here. Now this is where our stop loss would be, right below this low that created for us that fair value gap that was newly formed, and our high or our take profits would be at this previous high right here. You can see at this spot is where we'll put our take profits. So this is giving us a risk to reward of 2.33. And the next one is our trade number 7. Our trade number 7 happens to be a bearish trade. Now you can see how I highlighted this supply area. This is supply area. This is an order block coupled with a fair value gap here. You can see this fair value gap right here all the way to this spot. You see how price reacted from that fair value gap, giving us a break of market structure and a newly formed fair value gap. So at this spot, we would be waiting for market to tap into this newly formed fair value gap. So this is a short position right here as price taps into that fair value gap, and right above this previous high would be our stop loss, and here would be our take profits at this previous low right here, just before price taps into this fair value gap, because it might be dangerous for price to tap into this fair value gap and come all the way to take you out just here. So this was our trade number 7, giving us a 2.5 risk to reward ratio. Now the next trade we have is our trade number 8, right around the corner. Now for our trade number 8, we have a fair value gap here that was cited when we were looking for our trade number 7. So you see how price taps into this fair value gap here, reacted from it, giving us a break of market structure at this very point here. This was our break of market structure as price crossed above this previous high. This was a break of market structure. So the next thing we would look for is a fair value gap to place our entry in. Now we have a fair value gap just right around here. So now let's take this long position right here, and this stop loss at this previous low right here. So we'll put our take profits right above the high at this spot, because there's no fair value gap to bounce you away to your stop loss. So we have a 2.44 risk to reward ratio at this trade number 8, at this trade right here. So the next trade we have is our trade number 9, and this is a bearish trade. Now you know that price actually tapped into this previous supply area, now creating for us another fair value gap for our entry and a order block we can use for a higher risk to reward ratio. You can see this fair value gap here, and this is an inducement right here. So we'll put our short position just like so. Our stop loss would be at this previous high right here, our entry at this spot, and our take profits would be at this previous low here, giving us a 3.03 risk to reward ratio at this spot here. So the next trade was supposed to be trade number 10, but well, we did not have a trade number 10 here. I was expecting price to tap into this area, then move to the upside just like so, Let me put it for you. Expecting price to tap into this fair value gap and move upward, or tap into this fair value gap here and create for us a bearish trade, just like so. So either ways, we would have to anticipate that price would give us a break of market structure before our entry. So guys, that was the last trade for last week, and let's move on to our chart to check out more trades that we missed, and we'll see on our next episode on the trades we missed last week. Stay tuned and peace.